Hey guys, Doug the Retirement Guy here. We got a review of something new, the OMAH Vista Shares Target 15 Berkshire Select Income ETF. Our question is this good for a retirement account? This is a brand new ETF out there. It's kind of unique. I thought we'd get into this because there's been some talk and gossip about what's going on. So we thought we'd take in to look, what is this all about? OMAH, Omaha, the Vista Shares Berkshire. This thing is designed for a core equity portfolio that is really trying to mirror the 20 largest holdings of Berkshire Hathaway, so which is the Warren Buffett controlled program. So what they're trying to do here is seek high income, generate the income from this, selling options, selling different pieces of the puzzle, and really just follow what Berkshire has been doing. It's kind of unique that no one else really came up with this or kind of put in the Berkshire name into it. So they're looking to grow the value of the stock. Plus, the unique feature of this one that I really tell everybody about is they're paying 15% distribution, and the distribution is all based off of the price of the stock. And we'll get into that here shortly. Now, the only thing I have a negative right off the bat with this one is the 0.95% expense fees. That is extremely high in an ETF, especially when it's only paying monthly. But let's look deeper into what they're doing. So their top holdings, well, right off the bat, you can see Berkshire Hathaway. Then they get into the Apple, American Express, Kroger, Bank of America, Visa, Coca-Cola, all top name brands, all top name organizations. A lot of these pay a fair dividend across the board. And if you ever look at anything that Warren Buffett always talks about, he continuously talks about Apple, he talks about Coca-Cola, he talks about his bank stocks. So they're really doing exactly what they're saying. And this is the top 10 of 107 total holdings that they have. But I think showing this shows you that what they're trying to do is really cover the Berkshire top category. So why Omaha? Well, first off, advertising returns of 15% based on the stock price. Now, a lot of people I've talked to all were confused. What does this mean? How does this work? What is going on with this? And I mean, realistically, every dividend is figured out a certain way. These guys are basically coming back with, they're telling you the price of the stock times 1.25 will tell you what your dividend is going to be for the month. So 15% is very realistic that they're going to get from it, strictly because it's a simple math program. And these are going to be your dividends, any interest that they collect. And the one thing I do have it in here says capital gains, but basically what it's coming to is your 15% of the gain of the stock is going to increase your dividend. Now, they offer a monthly dividend payout, which here, on the channel, we love the monthly payouts. And then it's a copy of Berkshire Hathaway's top portfolio. So really is, if Berkshire's had such a great success, Warren Buffett is, the king of all and has made great success through this. Why not follow what he's doing? Why not follow that complete package? There are a ton of ETFs out there that follow the S&P 500. This is just a different path of following what Berkshire is doing, which is the Warren Buffett way. Now, remember, on monthly dividends, I just tell you up front with this one, is that you have two options. You have a reinvestment potential, which is where you're buying more, take your dividends and buy more stock each and every month, or take that regular cash flow, which for retirees is what I love, is just give me that regular cash, pay my bills, make my decision what I want to do with the money, and maybe reinvest it or keep it for whatever, vacations, extra bills, repairs around the house, do what needs to be done. So here are some of the facts and milestones of Omaha. First one is it only started in March of '05. I laugh because great timing for this one. You had the March Madness, and then you had the tariff war of April. So they started off really against the wall badly. Their distribution, it says monthly, and this is a simple way of doing this, is basically it pays 1.25% monthly of the share price. Okay, and I'll show you a little bit later of what day that they'll do that on. But basically, you could simply mathematically figure this out and know what your dividend is going to be ahead of time. Now, here's the big one. It just passed the $100 million investment mark in only 2 months. Many funds, it takes much longer, 6, 8, 12, 18 months to hit the $100 million mark. And these guys were able to do it in 2 months. My opinion onto it is because you're using the Berkshire Hathaway name, that people think they're getting into the Berkshire, which they're not. But they're also the Warren Buffett, which they're not. But overall, it's producing just like you would do the S&P 500. It's doing the Berkshire Hathaway. So people are liking this right off the bat. Investors are putting money into this. And that's why we wanted to do a review of this and say, hey, is this where we want to park some money? So, distribution information. I know we're saying it over and over again, but monthly distribution rate's 15%. Here's where they put that in there, 1.25 distribution amount compared to shares. Now, here's the neat thing I liked about this one is they have already posted and declared every one of their distribution dates all the way till the end of the year. So you can now go back to on 5/23. Basically, what is the price on 5/23? And you can start the calculations onto it. Now, the real official number is going to be on 5/27, or basically on the X day. That's when they're going to calculate what the dividend's going to be. Now, they made these dates extremely tight, so you don't get the what we call the dividend shopper, who will step in here and on 5/26 buy the shares, collect the dividend, and turn around and sell it, shortly after that. And what we always say is the recovery time of it. And people do that. That is actual full-time business that you can do. So what they're trying to do is get people into this and stay into it for the long haul. That's why you see the monthly setup and very short windows. So if you want to buy additional, always buy a day before the X date. So the return on Omaha. Now remember this, guys. This thing's only been out basically for 2 months. But the month of March is the first section that we look at. Everything was going fairly well. We had the March Madness happening, and they've had some little drips, but came back and dripped a little and came back. But then we hit the April tariffs, and this is, I don't care what stock, everything I've looked at, April is always the month that everything took a major reset, major dive. And this one is no different. This one dropped off at the high of the high 19s all the way down to the high 17s. So a good $2 drop off. But what got me excited about this, and I'm looking at this thing, it only had about a 2 to 3 day really major drop off. But what got me excited about it is look how it came out of the basement. It came out as a rocket. Now the reason I give you to that is it's Kuhn's fundamentals. If there's a problem with the ETF, if there's a problem with its investments, this thing would stay at the bottom and say, whoa, we got an issue. But when you look at this, it rocketed out, and then that scares people, so they sell off and get out of it, and then they're like, hold it, this ain't right. And they continue getting this thing out, and you see the second rocket out is on April 21st. So about 14 days after the rock bottom, they're already on their way out of this and back to normalcy. Now you look at 1907 as a dotted line across the board where it's really selling at. It's been flat for the past couple days, but we know that this thing came out of its shell and it's waiting to see what happens next. So, as we see, tariffs are today and then tariffs are gone tomorrow and then they're reintroduced the next day. And so they're just waiting. Which way do you want me to go? But I think they pretty much have said, we're well locked in. We're solid right now. We look at the stock below and we say, yes, 1 month you're down, 6 months we're down, year to date is down. But I don't think that tells the real story, what the line actually above tells you. The dividend chart, again, there's only been 2 dividends paid, one at 25 cents and one now at 23.9. We've covered that well, so you know the number. It's not going to be an aristocrat. It's not going to be a dividend that they're just going to constantly pad and continue to grow it or keep it at a steady level. It's based on the performance of the stock. And I believe what you're going to see is this thing's going to be jumping up a lot higher, probably more closer to that 25-cent range. Now we did put this into our $10,000 calculator, and again, it's timing. But there's a few things I wanted to show you that was really interesting to me. When we bought this at $19.83, we were able to buy 502 shares of stock. But on April 4th is when we had the drop off. It hit the $17.91 price point. But now look, 5 days later, that thing rocketed back up almost $1. It's like 94 cents. Rocketed in 5 days back up to 18.85, and now it's up to 1907. So it rocketed back to where we were happy, and now it's slowly climbing back up to get back up to that 1983 price point. So I'm not afraid of this stock in any way. On top of that, when you take a look at the dividends that you were paid, we've already collected $245 in dividends at this point. So we expect basically off of this thing here, we're truly expecting a 15% return. So we give you the returns as we've done here. We're down $414 or 4.14%. Our dividends, again, is $245 or 2.45. Now, all this is based off of just a simple, basically 2 months. So we're down 168 taking away our dividends. But I take those dividends and use them for living expenses. So we're just watching this, and we really truly believe everything I've shown you so far that this is actually going to come out and be a very, very strong stock. So I believe Omaha actually you see is growing in the past 30 days, is actually growing, and I expect it to get back up to its mountains of that high 19s to high 20s. So if you take a look at the 52-week average, now I know everyone's going to throw comments down below and attack, but here's the deal. We call everything the 52-week average because we take every single stock on every single day up to 52 weeks and do an average for it. So this thing comes into is $19.22. The current price is $19.07. So realistically, it's flat. It's 0.07 below average. So it's on sale. It was on sale earlier, a much better discount, but right now it's still on sale to where we want that to be. And then we come back to you, it says it recovered from the April tariffs very well. As you can see again, we just showed it last time, we'll show it again, the drop off, the rise, the fall, the settling out. So if we take the next 10 months, and I believe that this thing's going to get back up to what I say that $20 mark, you're taking a look at about an 80-cent recovery. Okay, 80 cents is a good 5 to 7% gain in the stocks alone. So when we get to these numbers, you take a strong dividend with a positive cash flow, it's going to be a stock that say, hey, we're not going to go super fast, but we're going to go down the road comfortably. So Is Omaha good for a retirement account? The answer, I believe very, very strongly, is yes. I put it as a moderate buy. Put some money into this. I would not put all my eggs in one basket. I would not put my entire life savings into it, but I would take some side, maybe dividend money extra that you have, or some cash sitting on the sidelines. I wouldn't be afraid to put it into this stock, in this ETF. Because the 15%, we're saying a 15% dividend, but that's 15% payout of the share price. So that could be actually a yield of a lot higher than that 15% total dividend. Now the recovery from a bad drop, and it's still growing. So we're not worried about the current loss because, like we said, we lost it in March and we lost it in April when a lot of shares, S&P was down 10%, NASDAQ was down 15%. So these guys were down, but they recovered fairly fast. So again, it's a fund that is solid. It's where we want it to be. And it's what I expect most of the new ETFs will be had. So again, my answer is get into this cautiously, but make sure you're in it. Hey guys, this is Doug, the retirement guy. If you like what we're doing, give us that thumbs up. Don't miss any of our videos. The subscribers, we're constantly adding subscribers every day. So we look forward to having you part of our team. And then if you have any comments, if you like what I've done or don't like what I've done, add a comment down below. Love to hear from you guys. And just tell me where we're going. Everything helps the channel grow, and we appreciate it. And we'll see you at the next time.